up, guys? Dave Putz here from JKP Holdings. Alongside me, as always, Nathan Turner.
Good afternoon.
Hope everyone's doing well on this Friday afternoon or morning time for you guys, but I'm glad we got to connected. So before we jump in here and introduce our paper stack guests, Nathan, how is things going this week for you? What's going new with you?
Good. Just got closing documents for property
Yeah.
I'm selling. Another one's supposed to be on its way. Moving ahead.
Oh, awesome. So it's interesting. We're doing a bunch of situations right now. We got some offers accepted, of course, this week. We sold a ton of loans last week as well. And this topic came out. We got the email, right? We got the numbers. And the hush hush started talking. I got phone calls about the numbers. And I said, Nathan, we got to talk to Paper Stack and got to dive into some things and get the thoughts process and answer some questions on general scale. Because right now, a lot of people are wondering, are notes going up? Are notes going down pricing? What's happening? Are there more supply? Is there less supply? What's new in that world? And what do we expect the next 6 months to a year? So I appreciate you guys. Getting their email, guys, was interesting because we never look at that as a collective wholesome, because we're buying things based on our model. Other people are basing on their own calculations, but to get an idea where the market's at is quite interesting. So, guys, why don't you introduce Paper Stack, what you guys do, and what the platform's all about?
Sure. My name is Rick Allen. I'm one of the founders here. This is Brett Berkey, my other founder. Paper Stack, it's an online marketplace. I'm sure you've heard of it, to buy and sell debt. But it's so much more than just a marketplace. We've got, it's an automated workflow engine. It helps you transact a note from the time you buy it you make your offer all the way through the time you're going to close on it. We've had, I know Nathan's been on there several times trading on the platform. So. Yep. We appreciate you guys having us.
Awesome.
Yeah, I don't think I got that email, or if I did, I deleted it without looking at it. So this is the first time checking out the numbers. So I'm excited to see what you guys have.
You're the one. You're the one.
I don't know what happened.
So one thing we learned about the numbers are for most people who aren't familiar, we have non-performing numbers, we have performing numbers, we have firsts, we have seconds. What other kind of assets do you guys have listed on there? I know you guys do CFDs. What are the different categories of assets available?
You got mortgages, you got land notes. So there's CFDs, but like CFDs, deed of trust. So that's pretty much it. Anything that's
we focus predominantly. It's going to be single family residential. Mm-hmm. You have some mobile home stuff on there, but predominantly it's, I'd say 75% of the assets on there are going to be single family mortgage or deed of trust on the platform. First and second position. Mm-hmm. It's important to know we do have first and second position on there. But that's sort of our niche right now.
Okay.
And you guys got going in CFDs, which I was happy to see.
Yeah, we had some help. Nathan, right? Remember that?
Was some conversations early on where I deal with a bunch of those. So I'm glad that you're into that now, and that's been helpful.
Yeah, you helped us go global too, because at that time, that's when we did. You're like, hey, I'm trying to create this, but it doesn't have a drop down for provinces. Well, I never thought anybody would come here, and so I'm going to change that.
Yeah.
International.
We're international now. We have Israel and England. Yeah, people are coming kind of from all over to start buying loans on there. So
that's awesome.
Hopefully we'll start transacting European debt.
I was gonna say, are you primarily right now only dealing with American debt right now, or? Okay.
Yeah, right now we're just focused on the U.S. market. We're rolling out an enterprise product probably by the end of this year, which will allow us to start letting institutions use the transaction engine, not necessarily the marketplace, but more so they can obviously use our marketplace, but to help transact the 20, 30, $40 million portfolios, track what's going on with conditions and post-closing tracking for, interest payments, stuff like that.
Cool.
Shocking enough, it's still being done through email and spreadsheets. So there's a long way to come
Yes.
at the level.
Yeah, absolutely. I think, like you guys, we've had conversations. Technology is my favorite thing, and this idea of, spreadsheets being passed back and forth is just odd in today's world, especially during COVID, right?
Yeah.
But it still happens. It's still available. I know our asset list is on a Google sheet that we have available, and that's so we can constantly keep it updated, right? This idea that we send a spreadsheet out and 3 days later you get email saying, "Hey, which assets are still available?" It's just old fashioned. I don't understand. I don't get it, but whatever it is. So with you
Yeah.
guys, with your assets, you guys have a ton of people looking to buy. You have a number of sellers. And I think what's interesting about you guys, different from a lot of services out there, is you actually share who the seller is. So if I had a bad relationship with that seller in the past, I don't have to deal with that person if I choose not to, or if I like that person a lot, I'll look at their assets a little differently. So that's pretty cool. In our system, our assets that we have available, I don't share who the seller is because I'm not as structured as you guys. I'm not, my business model is not to do loan transferring. It's just a side business that we have that we handle. But I think that perk is awesome. And I was checking it out, that ability to know who I'm dealing with is quite interesting.
Yeah, when we set out to develop PaperStack, one of the biggest things we wanted to bring was transparency to the market, right? We wanted to make things very transparent and then make things very secure. And transparency and security, they kind of go hand in hand. So it's, people have asked us, are you worried about people doing business outside the platform? Of course, it's something you think about, but when you see the same two people who are doing transactions and they've done 25 transactions on the platform, it's like clearly they like, it's more than just the marketplace. There's an efficiency portion to that people like. And honestly, a lot of people are using it just for the digital audit trail because everything happens and there's a digital timestamp. And if you ever have to get sued or you're going to sue somebody, it's nice knowing that everything is right there in a nice, neat little box. It protects you. It protects your other parties. So it's really worked out.
Yeah,
That
it's
that
the
is one
idea
of
of
the
like,
other big differences. Yeah.
I think like the idea of, we're watching, my son and I was watching the whole Ray Kroc thing, right? You can make an exchange of notes, but then there's the actual process is what people enjoy, right? That process is easy and simple that you can go buy notes anywhere else, but the process is what you guys bring to the table, which is interesting. So
Yeah.
I know that,
Right.
okay.
It's
So I
it's
think,
especially
I think-
helpful.
Go ahead.
I think it's
Right.
especially
Yeah.
helpful for people.
that's what I was gonna-
I think especially for people that are just getting started, where they don't know the process, they don't know how to, like, what comes next. So we've signed a purchase agreement. Great, now what? And so that's a huge help for people to know. Okay, so, and it's very much spelled out on your site is now this, and then buyer does this, the seller does this, and it walks them through exactly what the next steps are.
Funny you say that. We actually had two interesting conversations at one of the last conferences we went to years ago now, it seems like. Someone that was a first-time buyer, never bought a note before, he came up to me and said, look, he's like, to do this, he's like, I got kind of scared when I finally figured out who was behind the name of the company, because he didn't know the guys, he knew the guy by the name, not the company name.
Okay.
He's like, I knew he was big. And he's like, but he said, I knew as long as I just kept checking the boxes,
Yeah.
I would be able to close the deal. And he did.
Yeah.
And then there was another person that actually is part of a hedge fund. They're large and they put stuff on there. And he's like, man, I love this. He's like, I'm able to get a higher price for, asset because the very end retail guy will pay a little bit more than some other people. And I'm able to make more from my,
I
so
think it goes both ways. I think you'll see some higher, some lower.
it just matters, sometimes like that's interesting.
Yeah. But that outlined process is really helpful, and that helps just everything move, smoothly and easily all the way through.
Awesome. So I wanted to get into the numbers, right? So some questions that came up with the numbers and stuff like that. And for those who don't know, we're starting an investment community that we're gonna be meeting, and these numbers are kind of an idea to look at, right? What do you want to get into? Do you want to get to notes? Do you not want to get to notes? So the numbers itself give you an idea of what you should be looking at and what you should bring up. So I'm gonna see if I can carefully bring up the notes in a nice shared window so we can kind of look at them.
Okay.
Bring it up. Make it easier for everyone. Yep. Can we all see that?
Yeah.
Perfect.
Okay, cool.
Mhm.
Awesome. So let's break this down, right? We have the idea of investment to balance. For those who are not familiar, that's the UPB, or unpaid unpaid balance of the loan, right? So we're seeing the
Mm.
fact that it's showing here that a performing first is selling at 76% of the UPB, right? As a seller, that's awesome information, right? And there's some interesting things there. So Nathan, I know you haven't had a chance to look at this, so I'll
Mhm.
slow down, make sure you get a chance to look at it. So we have the first position,
Yeah.
and second positions here, performing and non-performing. And I tried pulling our internal numbers of things we sold. I just ran out of time, to be honest with you. But we were, oddly enough, as much as I did not know if the numbers would equal, we were close too, which was surprising to me. So Nathan, when you see this number, what's your first thoughts here? Performing first and a non-performing first being 11 points difference.
That's really interesting. That's really close. I would have thought there would have been a bigger spread there. The other thing that's interesting just off the bat is 17% lower than previous. Is that than a year ago?
Yes, that's 7. Yes.
Wow, that's interesting.
Yeah.
I can't like right quickly. I can't really come up with a reason of why the price would be 17% lower than a year ago. I would have said the opposite.
I would have said the opposite too, which was kind of strange to us when we looked at it, because people are paying, seems like they're paying more for non-performing right now just because how hot the real estate market is. Everybody's
yeah.
anxious to get that real estate back. We were kind of shocked when we saw the actual numbers. This is for 2020, so I don't know if how much of these numbers were pulled down from that sort of Q2 COVID dip.
Yeah.
Because I saw people for, well, I guess April, really no, it was May, June, and July. I saw people who had hard money selling off hard money loans at 80 cents on the dollar. So
Wow.
there was sort of this, holy cow, people are selling off just trying to recapitalize, because they stopped, a lot of those guys they were floating the, floating the escrow as far as like money that they were using to repair the properties, stuff like that. So that was interesting. That's the only thing I can sort of look at and say that might attribute to it, was just that Q2 started Q3 dip in COVID where things were kind of really still shaky. I think towards the end of the summer and definitely into the fall, people sort of were, they're comfortable. This is just how we're living for a while.
Right.
So
I mean,
what I'm
I'd love
seeing
it.
too is that non-performing number is weird to me, right? To see a non-performing note sell for 65% of UPB, there's some more factors, of course, to go into it, but that one part is amazing, right? Unless the interest rates at 10, right? I can understand that point of view, but it's interesting to see the fact that even performing seconds are selling cheaper than non-performing first on average here, a percentage of UPB.
Mm-hmm.
So,
Yeah, it's crazy. Until you start drilling into these things and start looking at the data, you're like, man, you would have no idea.
yeah.
You would say there's no way.
Yeah.
Yeah.
Really interesting. And then the investment to value, that's interesting as well. Is that just a function of equity and inflation?
I think
and,
that's a function.
yeah.
That's what I attributed that to. I was like, that's just a function of equity.
Yeah.
And slightly lower sales price. You know, we've got our sales prices where they dropped a little bit, but this is certainly a function of equity,
Yeah.
the investment to values. I mean, the market's been nuts.
Yeah, I mean, looking at the fact that performing seconds, it's hard to gauge that, right? Because equity deals and non-equity deals, there are a lot of other factors, but to break all the factors down is probably impossible. But the non-performing second selling 3% is crazy. And then obviously of that property value, to me, that shows the fact that a lot of these things are equity position situations.
Mhm.
These are huge equity.
I think I'll look at the closed deals as they come through and just kind of get an idea of what's going on. And a lot of them, a lot of hot markets. I saw a lot of Florida. I saw a lot of second position in Florida, and the Florida markets, pretty much statewide of just, definitely not, maybe not in the panhandle, but anything, Jacksonville, Tampa, Orlando, Miami, definitely anything on the coast. It's been crazy.
Yeah.
Stuff is
Yeah.
just going up quickly. Even now, stuff is on the market for one day, selling over asking price, and it's just, I'm sure you guys are experiencing some of that in,
Yep.
in some of your localized markets, but
Yeah.
Florida, I guess, our no income tax, people seem to be coming here pretty quickly.
Yeah, I just went into contract on a property in Tulsa in Oklahoma. We had it listed for
Oh.
105 and it sold. Now here's the funny thing. I had two offers, one at 121 and then the second one at 120 with a clause that said they would beat the highest bid by $1,000.
Escalatory addendum. I used to use that.
Yeah.
That's awesome.
So went for
Well,
122.
congrats on that.
Yeah, it was awesome.
Patch.
That's great.
So
Yeah.
one of the questions we have on Facebook, so we're running this on Zoom, but we're live on Facebook through Zoom, was the question, can they set up a save search kind of thing of when an asset is added? Elijah, yes, you can set up what they call a save search. So that save search will notify them when an asset in their search is brought to the system. Is that correct?
Yes.
Yes, that is correct. You can set it up there. It's very robust how detailed you can get as far as your search parameters, and then you'll get notified when assets become available. So it's, I say it's working while you sleep. It's the efficiency tool.
It's also great for sellers too.
Yeah.
When there's a new seller comes on, they think that maybe they're gonna list something and then they might need a couple days to have people look at it. But as soon as that thing hits live, it automatically goes out and they're getting offers right away.
Yeah.
We've had stuff go like right on. I had a guy, he did still don't understand how it worked, but he had a bunch of land in Colorado and he said, "Do you think it will sell?" And I was like, I don't know. I looked at it, it looked like just out in the middle of nowhere. And he called me back there that day. He's like, "Man, I'm already in the closing." I was like, "Really? I'm that?" Hey,
And I've had that too, where I've listed stuff and within hours I'm getting questions, at the very least offers in some cases.
So
Yes,
we're looking
so
at
true.
sales prices here. What we're seeing here for the newer investors is probably very attractive, right? So we're seeing the fact that most of your average purchase prices are below 50. That pillar thing, even below 30 in most of these situations, is quite interesting.
Yes, these are they could be a little misleading. We do have some pools that go out, some micro pools, and we're doing some stuff.
Oh, that's true.
Yeah, so we do sell some pools that are 500,000, but for the most part, the single priced assets that are available, this is what you're seeing, and it is attractive for the newer investor coming in there. But we do have, it's crazy to even look at a first position that was sold for $2,000.
Yeah. Yeah.
Oh, performing. How do you not have the yield on that one? It's amazing for that to happen.
So I got a question
Yeah.
for you guys that I was listing a loan with you a month or so ago. And I'd just like to hear the rationale because I'm sure you've talked about it. But I have one that I wanted to list that's subperforming. where she pays sometimes and then didn't pay and then she would catch up and it was just kind of off and on, hit and miss. But there wasn't a category for sub-performing. So I ended
It's
up listing
funny
it
that
as
you-
non.
Yes, it's funny you mentioned that because that's something that I just listed 3 or 4 assets yesterday. And
Yeah.
I put on there and I was like sub-performing. And then in the description, I was like, look, they're paying, they're usually rolling 30, rolling 45, somewhere like that. They get caught up. So I think we're probably going to add a sub-performing category on there.
Okay.
The thing about it is a lot of the way we designed the system was we thought that all the servicers would just love to integrate with PaperStack and that they'd just be chomping at the bit. And it's been a little bit of a task to get them to do that, but it's hard coded in there to where, you know, our servicer sends a nightly data dump. So if you look at all of our assets, they're updated every night. I don't have to do anything. And it comes right from our servicer, whether it's performing or not. Well, you guys might know that servicers will call it performing as long as they're not 90 days past due,
Right.
right? And
Yeah.
so it, you know, our system is reading it right off our tape. And so I've actually have to put it in the title if it's sub-performing or not, just because
Okay.
it's getting updated nightly. And I could change it today to sub-performing or non-performing, but as soon as it gets updated at night, it's going to go right back to performing. So I just write it in the title in the description.
Got it. Got it. Yeah, I ended up listing it as non-performing, and then I got all these questions, and they said, "Well, but the next pay date is like a month behind. So what do you mean it's non-performing?" Well, it's sub-performing.
Yeah.
But I'd rather err
Yeah.
on the side of caution. So that's what you got.
We had
So
this
what,
Oh,
so one of the
right.
requests that Josh Scott had was that adding partials to the platform.
Yes, partials. So it's like, man, we're up against this whole like bandwidth thing. We have people can still conduct a partial on there. We've had people buy and sell partials on there, right? But they're putting that language in there. We don't have the contracts or anything like that built in. You could use your own custom documents, but we don't have a way to sort of market it in the marketplace and label it yet.
We did have the idea of being able to turn something into a partial after you actually close the deal. So if you bought it, you could turn right back around
Yeah, it'd be just resell it as a partial.
and sell a part of it.
It's something that there's a ticket out there for it. By a ticket, I mean, it's in the pipeline, but we're, rushing and sprinting to getting enterprise done. It keeps getting bumped down because that's for PaperStack. That's a huge goal of ours,
For
but
sure.
it's coming, definitely.
These are really interesting numbers just to see what, and these aren't made up numbers. This is the stuff that you just took straight from your site. So it's interesting to see how the market has changed in the last year.
It did. It has changed a little bit. We did this. I think the last time we did this report was 19, right?
We did a mid-year,
Last year?
we did a mid-year with Notes Direct, and then we did.
Yeah, we did a white paper with Notes Direct, and we took all of our data and aggregated it, but it didn't necessarily have all this stuff there. And we're doing actually a follow-up white paper shortly, just to we did one mid-year. We'll do one on all of last year's data. It's different numbers, different stuff that we look at. We look at more like state specific, which states were the biggest sellers, stuff along
Servicer
those
transfers.
lines. Servicing, who are the servicers that are being touched the most? That sounds bad. Being used the most. But yeah,
So we're seeing,
one of the
we're seeing this, one thing I want to mention though, is that with everything going on, a lot of people are asking about supply. Someone mentioned the fact that supply is low right now. Are you guys able to see your ebb and flow of how many assets are coming on the platform and going? Where are you at today versus a year from ago?
we actually have more we have more today than we did a year ago. Is that about right?
I don't know. I'd have to look. I mean, usually it seems like, I don't know, for some weird reason, always like in the beginning of the year, it's always lower. It always seems to be pretty hot around like June and July for some reason. I don't know why. Like last year, I noticed that there was like 300 something notes there at one point,
Yeah.
but that was later, like, I don't know, July or something like that, but, I don't know what.
It's, I
Interesting.
mean, what are you guys seeing as far as,
Are you looking at the gecko?
yeah, I'm looking here, as far as inventory? I'm curious to see what you're seeing on your end.
Good, Nathan.
I haven't seen a shortage. Compared to 3 years ago, 5 years ago, sure, there's less out there, but I haven't really seen a shortage, a big enough shortage to make me worry. There's been plenty of notes available. And I foresee many more coming available in the next 12 to 18 months.
Yeah, so I just pulled up our stuff. We're up about 40%
Okay.
Wow.
as far as the notes for, yeah. So it definitely, the inventory is there. One of the things that's actually kind of encouraging for us is we're seeing larger funds find PaperStack. Like before, we were having funds who were people who were managing, their family's $100,000 or $200,000. Now we've got some funds on the platform that are, $100 million funds, $250 million under management. So that number is starting to go up. And the great thing is they're not only selling on the platform, they're buying on the platform. So it's really helping out buyers and sellers,
Mhm.
which is great. And so I think the longer we go, the longer PaperStack's around, the more of that you're going to see. And certainly once we tap into the enterprise market, you'll see that more as just a liquidation strategy, and it should make more inventory available to the retail investor, the smaller guys.
Yeah, that's great.
I know recently for us, the last month or so, we've seen a lot more inventory than we did in probably fourth and third quarter of 2020. Not sure why even performers are selling. We got a tape of 200 performers just recently, which in 2020 we didn't see larger tapes. They just weren't around as much as they were in the past. So for us, supply has gone up just first quarter, and I understand why sell non-performers. People are just kind of stuck and just want to get out. So I'm curious
Yeah.
to see what happens and where it goes, because I think right now CFDs and land contracts, even seller finance situations are getting interesting because of that.
Mhm.
People diving into different sectors.
Yeah, we see a lot of seller finance stuff. We've got people out there who are doing some active marketing. They're turning quite a few notes over each month. And we're doing it a little bit, but there's the seller finance market is very interesting right now. Largely because you can get some really good deals in the seller finance market.
Yes.
You can get really, if you know how to market and you know how to get in touch with people, wow, there are some smoking deals out there on some really great assets. So yeah, it's interesting. Those are finding their way onto the platform right now, which we're certainly happy about.
Yeah, that's
Awesome.
cool.
So I know for me, the platform has been interesting. We have our own little exchange and they're just so busy with everything going on. We're just not diving into it. But I did test out some things and I have no problem giving feedback, but I think overall the setup is really, really nice. From the old FCI exchange to this is night and day. So it's good to see that. So with regards to sellers, are you guys, the difficult part of doing these kind of exchanges, I think you guys have fixed, I want to say, besides this, the automation, is dealing with servicers, right? Say we list an asset, and to get that updated data is quickly often a difficult task.
Yeah, it is.
Yeah, that's true.
So we've, like I said, we have one servicer who SN, I'll talk SN. They'll send, if you're servicing with them, they'll send nightly data dumps to PaperStack. And we're tying in with FCI. FCI's got a newly released API. Yep, that's going to be fantastic. And that's like, for us, that's the coup de grace. That's what we want. That's the golden prize. It's like, look, let's let the computers do the work. Let's let them talk. We're a technology company. If you have an API, we're happy to hook up with you. So we're definitely open to working with servicers and having those integrations. But starting out, man, it was a beast to try to get people to even talk to us. We would go and people would be like, who are you? PaperStack who?
Yeah.
And
Yeah.
then I remember it was actually in 19, our last one
Dallas?
in Dallas when we were
Yep.
at East Speeds thing, Note Expo. Like we walked in and there was people weren't talking to us. The demo went out and then people were like, oh, we need to talk and integrate. So it's been a long road to hoe, but we finally are, I think, getting there.
That's great.
So what do you expect to come in 2021? What are some things that are coming out that you guys are able to share at this time?
Some huge things are a la carte closings. I think that's coming out very soon, probably within the next 60 days, which is basically you can order a closing through PaperStack. You don't have to be in the marketplace. Drastically reduced fees, like just a flat fee, $200 closing on an asset. The ability to close it inside of a like a white label. So we own noteclosings.com as well. And so you'll be able to order up a closing. If you're brokering a deal, you don't want them to know about PaperStack. You can order a closing. If you have your own marketplace or run your own trade desk and you're like, look, I just want to use the workflow. I don't want the marketplace. I don't want to pay 2 points. I just want to pay a flat fee, $200 an asset for the workflow. That is coming. And so I think that's going to be really big. Integration with Casey Wilson
Oh, yeah.
is
Okay.
that's awesome. They're going to be handling all doc prep. And
So
then
explain what that is
obviously-
for those who don't know what Casey Wilson does. What do they do for those who don't know?
Oh my
We're impressed
gosh,
whether
Casey,
people might not know.
Casey Wilson is unbelievable. They are truly, they're unbelievable, and they handle large institutional trades of thousands of loans at a time, and they deal with the one-off mom and pop guys. So they'll handle. Casey Wilson has a bunch of different services they offer. Document preparation. So if you need them to prepare assignments, allonges, if you need them to prepare quitclaim deeds, forfeiture of bond, they can prepare if you're doing a contract for deed and you're taking that back. They also do stuff like imaging, where they'll image all your collateral files and they'll host them in a cloud, basically Dropbox, and they'll do document storage. There's so much stuff that they cover. I couldn't possibly do it. It's like a whole hour to go in detail about it.
Yeah.
We're integrated with them. They're going to be a vendor on our platform to where all of our doc prep will be handled by them. And we'll make it easy for people to start ordering up due diligence from them. So maybe they want to order a complete collateral audit where they go through and maybe you're a first time note buyer and you don't want to put that pressure on yourself of running the risk of missing something. Casey will is a great place to start. So that's good. Our due diligence portal coming up
Yep.
in the middle of the
Cool.
year, you'll be able to start ordering your BPOs, O&Es, not from vendors that we're choosing, but from vendors. If we'll have multiple vendors on there, so you can choose who you want your data to come from.
Cool.
So lots of stuff like that, and then the enterprise transaction is really that big one at hopefully by the end of the year, which that'll be huge for us.
Very cool. Casey Wilson, I know what I use them for mainly is chasing documents. So if there's something missing in the chain 3 or 4 transfers ago, I'm missing an assignment or something like that, then I'll call them up and they work their magic. And they oftentimes, I've had it turn around in 24 hours where I've got the document that I was missing.
Because they know people, right? They've been doing
Yeah.
it for, I think since the 80s or 90s? They've been doing it for a while.
Yeah.
And so they've just got all the relationships.
Yeah. That's amazing.
Oh, that's really great.
So guys, what do you, for first time note investor to get started with you guys, what do they need to get going? Because technology is great for organization, but also secure.
Is there a
So
registration or anything like that? You guys
Yeah.
charge anything?
No, it's free to get on the platform. It's free to register. If you're going to be a seller, there is a seller onboarding. We just have to go through and approve you, make sure, you're selling your assets, stuff like that. But seller onboarding is pretty quick with Brett. And then, you can register for an account today. It's free and start looking at assets. It's an open platform.
cool.
And at the end of it, again, not too much into it, but so the way you guys make money is when a transaction completes, then you charge a fee on that. But let me just say,
Right.
it's not a lot. It's not a huge, crazy fee that's going to kill the deal.
No, and it's actually going down. So
Yeah.
Right
we're
on.
working on we're working on tiered pricing to make everything just a lot better. You can check out, we can do a live demo would be great with you guys, or we can give you a
Yeah.
recording of a demo, just to see what actually goes on, because we do so much. People don't really realize how much the platform does.
Yeah.
Even at the very end of the transaction, when it's time to do the servicing transfer, we kick it off with an email to the outgoing servicer, the incoming servicer. We give them the cutoff date, we give them the UPB. We say, here, we copy everybody on the email. You're the outgoing, you're the incoming. Here's the buyer, here's the seller. Because that's something that honestly, how many times does that get overlooked? It can get overlooked a lot. And so we just started, you didn't have to worry about it. It just happened. And that's, everybody seems to be pretty happy with the platform. They love the automation, and
Yeah.
love to have you guys. Thank you for coming on there.
Not a problem.
Yeah,
So
no, that's
it's-
been one of the biggest things is
Yeah.
you see a lot of the platforms, and I remember having this conversation with you a couple of years ago, where you see a lot of the platforms, but that's the biggest difference is that automation that goes into it, and the document prep and all that kind of thing that a lot of people just, especially when you're getting started, you have no idea what's involved, and there's
No
stuff to
clue.
do.
Yeah. Well, before we end, guys, I just want to let everyone know we are having our investment community first open meeting Sunday night. So if anyone is looking, it's set up like a mastermind. So we're going to have more higher level to mid-level people that are looking to get together and talk on a weekly and bi-weekly basis. I encourage you guys to check out PaperStack. Some of the automation I've talked with Brett in the background is awesome. As you guys know, I'm all about getting things done quickly and efficiently and correct. That process is done, right? Our assets that we have for sale do not have the process they have, which is amazing, right? So you see the prices that things are selling for. Some of these prices are awesome. If you're looking to sell an asset, you can literally buy, on average, 65% for a non-performer. That's right. They don't do any kind of education. It's strictly there to automate buying and selling notes. They also have notary stuff. That's electronic notary. I mean, there's no more of these going to the banks things that we did for, I don't know how many years. Having my neighbor sign my notary doc, right? It's amazing what with technology has been going on, and the fact you guys are pushing that edge even more and more. So I thank you guys for doing that stuff. It's encouraging to see people getting that interest to do it and be willing to take the risk on of automating this process. So sometimes people are older, are kind of nervous about doing this stuff. But we'll be talking more about this stuff in the future. If there's any more additional questions, feel free to jump in and leave them. If not, Nathan, did you have anything else you want to talk about with these guys?
You guys down in Florida, you're crazy down there. So what do you guys see for COVID fallout? Like what?
Yeah.
You guys are almost epicenter, but what do you see for?
It's so I kind of have COVID fallout. We are the epicenter according to everything, but I sort of have an inside track that my wife works in the emergency room as a nurse practitioner. Yeah, so I don't know. I would just say don't believe everything that's splattered across the media.
Sure.
It's not. There's not dead people laying around everywhere. I mean, it's not the apocalypse or anything like that. It's not as bad as people say. It's interesting how you can manipulate numbers, and you can say, well, hospitals are at 110% capacity. What's interesting about it is staffing is cut by 60%. And so there's tons of beds available. There's not the staffing there. And why is there not the staffing there? Because they keep people inside. And if you keep people inside, there's not people coming in the emergency room. So you're not generating the revenue. So you got to cut the staffing. So yeah, don't believe what you hear. Florida is great. It's awesome down here.
To second that, my wife's a PA, right? Assistant,
Yeah.
same level as your wife. And she works
Yeah.
ER in urgent care. And you're right. I was shocked. It was, I want to say May or June. She's like, yeah, my hospital's cutting the docks. Like, wait, cutting the docks? Like this is, and she's, yeah, the money's not available. The patient count at the ER is lower than on average what it should be at. And she's like,
Oh,
we
yeah.
have to cut job. Like, well, what's going on there? It's like, it's because surgeries aren't happening because the money real made for hospitals aren't in surgeries.
Right.
Mhm.
So they're
Right,
cutting
and
all the
so-
stuff. It's crazy.
It's just, you hear things and like I mean, Florida's been, I would say, I don't know, you would say freer or
Yeah, you are.
maybe not, like the least lax, been
Yeah.
pretty lax on as far as, DeSantis, our governor, has been like, look,
Yep.
we're not shutting down the economy. And you look at it and you be like, we're doing okay. We're not, it's not like
Yeah.
our numbers are crazy. And so, I saw the Super Bowl. I
Oh, yeah.
saw the Super Bowl that, they let it loose for the Super Bowl because Tampa Bay Bucks won and they got, Tampa Bay in general and Floridians got torched. And the 2 weeks following the Super Bowl, they reported the lowest numbers since like last year.
Wow.
And so it's just, yeah, it's just, whatever. I don't want to get into the, I
I'm
can
in
go-
Jersey,
go on
so
and-
in Jersey, it's the complete opposite. I don't know, Nathan, how you guys are. We're still locked down. I think we're at 40% restaurants, but the problem is they can't go above 50 because the 6 foot distance, they can't, like, it's still crazy. Yeah.
Wow.
Wow.
What about up there,
Yeah.
Nathan? What's Canada like?
We're still locked down as well. The thing is, for myself, I mean, I don't go anywhere anyway. I work from home. Everything I do is at home. So personally, it doesn't really affect me, but I am very interested to see what it's going to do to the overall US economy. Just to see, I expect we're going to see a bunch of stuff coming up available. But on the other hand, if numbers and everything are overinflated, maybe we won't. Maybe there won't
I
be.
mean, do you guys kind of feel like we're kicking the can down the road on the foreclosure
Oh, yeah.
stuff and like we're like, 8 to 12 months from like, oh wow, there's some inventory available
Oh yeah.
Yeah.
because of
most
us
definitely.
kicking this can down. I mean, there's 30% of the mortgages are held by privates. And I learned I have 2 going on in Chicago right now. Chicago has been seeing 5 cases per judge a day on foreclosure via video conference, but none of them could be owner occupied.
Yeah.
So it
Wow.
couldn't be owner
Wow.
occupied.
Yeah.
And on April 1st, they're opening up fully to let it go. So I mean, I've got 2 that were at judgment in February of last year and just got hit a brick wall. And I'm
Me
like,
too. Exact
Yeah.
same thing in Chicago. Yeah.
so it's
So-
one of those things where right now I'm like, I want to get those back because the proverbial real estate time clock is ticking.
Yeah.
It's
So the weird thing about that, and we talked about this one of our previous Facebook lives, is that I know you guys have been involved in the space, maybe not Brett, but for as long as we've been around. I think though the massive amount of people who are at the upper level has grown. The hedge funds that are around now that weren't around in 2012, 2011, that those people will probably absorb some of the loans that are out there where it won't trickle down as much as it used to.
Hmm.
Where do you guys see that happening or what not happening?
So I think kind of what happens is, unless they're super niche, those sort of birds of the feather flock together. Like there's always that 20% of a trade that just doesn't meet the criteria and it drops out.
Mhm.
It just drops out. And if it doesn't meet that guy's criteria, the next guy coming down the line is probably not like, hey, I would love to buy that. That's typically not how it works.
Mhm.
Yeah.
That inventory actually, when that falls into the hands of sort of the retail investor, it's like a match made in heaven. It's stuff
Yeah.
that they can buy. It's stuff that meets their criteria, it meets their budget, and they've got, they put that personal man hours touch in it. So I agree with you. I don't think there's no way we'll see what we saw in 10,
Yeah.
11, and 12.
It's not the same scale.
That's realistic. But
No, yeah,
I
not the same
do
scale.
think there's going to be an increase in. I think there's stuff that's going to fall down.
Okay.
It'll be interesting to see how much and when and what that's going to do to overall supply and demand and all that kind of thing. So, but
Yeah, there's
we'll
there's
see.
also still those funds out there who like like a KCC who will buy a big, huge pool
Yep.
and maybe overcapitalized, under manpowered. They're
Yeah.
still focused on that velocity model, right? They only have so many man hours they can throw at something. So if you
Yeah.
throw them an offer and they're going to make 4 or 5 grand on it, don't be surprised if those hit the street.
You know, we talked about too is, you know, some of the bigger funds who are buying from Fannie and Freddie, those trades are still trickling down from 07, 08, 09, that they're still selling off those assets. That
Mhm.
they didn't start selling them in 2011. I think they started like 2015 selling the assets. So
Yeah.
those assets are still backdated and whatnot. So yes, I agree there'd be some kind of flux. I just don't know what's going to happen with the assets. And I
Mhm.
think we'll see commercial stuff too.
Oh yeah. The commercial stuff, like, I mean, I know here we're downtown and we're at our downtown office, like once a week, maybe twice a week. But just, I was walking down the street. I was like, man, there's no business people out walking. It's Friday. Normally you would be shoulder to shoulder, especially, late lunches, stuff like that. People, it's happy hour. People are like cutting out early, man. It's just dead. And you look around all the spaces. It's
Yeah, it
just,
sucks.
I know it's going on in New York. New York is
Yep.
losing commercial right and
Yep.
left.
Yeah.
So I think
I'm
you're
in
right. I think the
Jersey.
commer-
And I'm seeing a lot of people move from New York to Central Jersey because they don't have to commute anymore. They're an hour outside the city where they can drive up there if they need to do a meeting real quick, but they're moving to Central Jersey because they can. And all these office spaces are just changing over, and whoever coming with that technique to have Amazon buy the entire world up and use every office space available, he's going to make really good money. So I think that the transition period of figuring out is pretty interesting. So
It is, yeah. We're doing a Series A funding round right now at PaperStack and sending out stuff to different venture capital firms. And probably 10% of them, the address is no longer valid from just a
oh
year ago.
God,
They moved. Yeah.
wow.
So
Oh,
it's
interesting.
just, yeah, it's crazy. It's nuts.
That's an
So-
interesting time.
I'm gonna ask you, what have you learned from a year ago to today that the common seller buyer, what has something changed with those people? Is there something you could say, well, the buyer used to do this, now this happens? Is there anything that's unique that you can, off the top of your head, that's changed?
I think if anything, there's the wound of like that 3-month dip is still tender, and people are still like, oh, what's the next thing that's going to cause that dip? Should I be waiting? I think there's some people who maybe are sitting on the sidelines like, oh, they hear us talking about maybe an increase in inventory at 8 months. And I think not to their benefit, that they're going to maybe sit on the sidelines. And I think that's absolutely, I just don't think that's the right thing to do. Somebody asked like, when's the right time to start buying notes? Like, well, always is the right time to start buying notes. And you can look at it and say, well, prices are higher. I'm like, well, real estate prices are through the roof.
Yes.
So if you're buying non-performing, you're riding it. Or if it's a performing loan, it's like, well, if you're buying performing, you're buying the yield, right? What are we talking about here? If you're happy with the yield. So I think that's the one thing is I think just there's still the little bit like, should I, when some people were for sure just like flying through the market, some people are a little hesitant. I think that'll change because I think we still have probably another 12 months of like a really strong market.
Yeah. Well,
What
guys,
about you guys?
I for me, I've learned a lot of people are getting in the space for the fact that same reasons that they're like REO is way too expensive. And they're finding this
Mhm.
world of notes similar to what's happened over the years that, hey, short sales, REOs are expensive. Let me move to the next step and I can buy these notes. I'm seeing a lot of people move into that specter and land contracts. The seller finance world is getting nuts. So I'm curious about getting that process automated that I'm trying to work on my end. Nathan, what have you seen with people in the last year? Obviously prices are up, but real estate in
Yeah.
general is up.
I think one of the most surprising things to just about everyone is I remember having these kind of conversations last March and April and May. And the most surprising thing was how many defaults were not happening.
Yes.
And just everyone was expecting huge number of defaults in their mortgages and payments and things, and it just didn't really happen. There's some dip, but hardly, we're talking like 1 or 2%
Yeah.
of the whole portfolio. So when we talk about things coming available from defaulted mortgages, we can talk about this forever,
Yeah.
but there's, free government money that I helped prop things up for a while, and that's still going
Yeah.
on. And I think that's certainly a factor.
Yeah.
And then we've got moratoriums, same thing, just kind of kicking everything down the road. So in a lot of ways, I think it's still too early to say exactly, to really accurately predict what's going to happen and what kind of fallout we're going to see.
Sure.
But generally speaking, I don't think it'll be as bad as anyone thought.
The government's helped a lot of that though.
Yeah.
So I'm curious what
Yeah.
happens when that money stops and that fact that you're living scot-free right now stands. I know I've been posting articles about that.
That's the big question, I think, is so when the free money stops, then what?
Yeah.
Yeah.
Yeah, for sure.
So for those who are still listening, next week, me and Nathan Turner will be on where we have a couple different topics we're discussing. We're probably leaning towards bankruptcy talk. So definitely tune in next Friday for talking on that. In the meantime, guys, I appreciate you guys coming on. The numbers
Yeah.
are awesome. The fact you pull the information out there and share with everyone is really awesome. Because a lot of people ask that question, what should I buy at? Where should I go with my numbers? And this kind of helps them kind of guide them a little bit. So
But even that being said, it's 65% with the average, but the range there was huge.
Yeah.
Yeah,
So
it's a huge range. So we put it on there so people can get that idea. It's like, look,
Yeah.
don't get hung up that like I have to be at 65 cents. If it's
No.
66 cents, 67, it's okay,
yeah,
right? It all works out. So yeah, we
Yeah.
appreciate it, guys. Thank you for having us on.
Yep.
A lot of fun.
yeah.
awesome.
Good to talk to you guys.
All right, guys. Well, I appreciate everyone tuning in. We will talk to everyone soon and hope you have a great weekend, everyone.
You too. Thank you.